Hello there, this is James, and you're watching OneRoyal, and it's live. In today's program, I want to discuss how the market is possibly woke up to one of the worst hangovers in recent memory and the implications of what happened yesterday. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever shall be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand for entering any trade. With that out the way, let's get started. So, yes, indeed, the market has indeed woken up to quite potentially the worst hangover, or so hungover, in recent memory. Because the markets have practically nosedived after Liberation Day, and what it means was finally revealed as Trump set out his tariff plan, his reciprocal tariffs, which will impact at least 185 countries. Now, of course, straight away he has his baseline tariff on all imports, which would be around 10%. However, he did, in his little speech he made yesterday in the Rose Garden, he did single out a couple which he calls bad actors. Countries in particular, he thinks, or he believes, have given the United States a very bad deal indeed, and he's going after them more aggressively than the 10% baseline, which he's going to put into place. Now, I'm not going to go through all the countries which are going to be or are considered bad actors, but here's just a few of them. Okay, you have China at 54% total tariff now, Euro 20% tariff, Vietnam 46%, Taiwan 32% tariff, Japan 24%, India 26%, South Korea 25% tariffs. That's just a couple. Just a couple. There's just some of the main ones. Don't forget, of course, tariffs on Canada and Mexico already as well. So, in a nutshell, begun this trade war has. Yes, this trade war has really fully, properly begun now, because both China, Japan, South Korea, and the EU vow to retaliate. Now, here's the thing. Here's the funny thing about this whole thing as well, which I find quite... I forgot to turn my light on again. You always do that. It's going to go on. Anyway, but always forget to turn my light on. Here's the funny thing about this. Japan, South Korea, and China have actually got together to discuss a plan of action against the US on these tariffs. Now, China, Japan, and South Korea aren't best friends. Aren't best friends at all. In fact, they also have totally different visions and ideologies, political visions and things of this nature. And they have a bad ancient history. Don't forget a certain thing which happened between 1939 and 1945 between the three of them. But this whole thing has put them in talking terms with each other to come up with retaliation against Donald Trump's tariffs, which I find really fascinating. So yeah, they are going to retaliate. As well as that, the EU has said some things as well, and they are going to retaliate quite heavily as well. This is what the EU's had to say. This is actually the German economy minister, Robert Habeck, I think it's pronounced. Sorry if I did that wrong, Robert, but this is what he had to say. That is what I see, that Donald Trump will buckle under pressure, that he corrects his announcement under pressure. So he reckons they could put them under pressure and he will correct his direction. He then went on to say, and this pressure now needs to be unfolded from Germany, from Europe, in the alliance with other countries. And then we will see who is the strong one in his arm wrestle, So basically, he's saying that all of Europe needs to unite against this, as well as that they need to branch out as well with other countries, i.e. Canada, for example. Don't forget, Khalid Carney or Mark Carney, he did, so far in his term as PM, and he's only been PM for a short time, he's done trips to France, trips to the UK to build bridges. So, and as well as that, don't forget, this is where the trade war is going to potentially get really hot, really heated up. Don't forget, Trump said if there is anything anybody does get together to hurt the US economically, there will be repercussions. So again, this is full swing, but it doesn't end here with just Germany as well. The European Commission President Ursula von der Leyen, I think, I'm rubbish at names, I'm sorry. She has said this: we are prepared to respond. We are now preparing for further countermeasures to protect our interest and our business if negotiations fail. So that's quite an interesting point, though, that she is saying that they're not coming in with a full plan of retaliations yet. She's saying if the negotiations fail. So really the idea I think she's trying to put across is we're going to use this to negotiate instead of retaliating, straight away or retaliate. So that's an interesting little point to make out. But anyway, what's happened to the market on the back of this? Well, basically, the Trump pump has basically become the Trump dump. And we'll look at the market at the moment, okay? Because it is a bit of a bloodbath. It really, really is. And here's the funny thing. At the moment, as it stands, despite the fact it's the US who instigated this trade war, they've started it. The US at the moment is losing out the biggest. And we'll look at it. Now, this is just, pre-open and the London Open. And as you can see, the S&P is far more negative than the stocks, a Euro Stoxx 500 in Asia. And the dollar index is also a lot lower. And then you see the pound and the euro, and we'll talk about those in a minute, also performing better. And the yen also performing better. So it's the US at the beginning, and we'll look at it again in a minute. Look at it properly. That this US who's initially losing out in quite a big way as well. Now, some analysts are even predicting roughly around today, next session or so, 1.7 trillion is going to be erased from the S&P 500. In a single trading session. And before we go to the markets, because there's a lot of things I want to look at, I want to really look at this Trump pump, Trump dump. Okay? There's another real big loser today, so far today. Let me check, see if it's, how bad it is before we have a look at it together. Yes, very bad loser today. And that is Apple. Apple has basically plunged. It started to plunge in the pre-market. The market's been open now for about 45 minutes and it's plunging again. And we'll look at it. And the main drive behind Apple is because of these tariffs. There's big fears in supply chains. Okay, because a lot of, countries like India, Vietnam, Malaysia, Thailand, Ireland all produce Apple products. They're all facing big tariffs. Vietnam, what, 46%, for example, 24% for Thailand, 20% for Ireland, who's in the EU. India's, what, 24%, something like that. I can't remember off the top of my head. But they're all facing hefty tariffs, which is going to affect Apple supply chain and Apple production. Now, one analyst even says Apple will lose about 255 billion in value today. And it's not just Apple, but Apple's one of the big ones. The whole retail market is under pressure. Nike, or Nike if you're American, etc. Adidas, which is European, that's under pressure, obviously. But all of this is because Walmart under pressure. This is all because, obviously, for supply chains. But anyway, enough of this. Let's have a look at the market. Let's go and have a look. Let's pull it up and actually have a look at what is happening with the market so far in the session. Like I said, the US has only been opened. It's only open for the last 45 minutes. This is Apple. Straight away, let's start with Apple. Okay. I mean, Liberation Day. Look, it closed 223. Excuse me, opened $204. It's currently traded at $204. It's down 8.60% today. I mean, look at this big drop in pre-market. Then we'll have a look at Nvidia. Again, down, not as dramatic as Apple, 4.91%. Alphabet, down 2.94%. And like I say, it's only been 45 minutes. Amazon, again, big supply issues, remember. It's going to be affected by supply chain. It's going to hurt it. 7.67%. That's how much it's down by. Microsoft, down 1.91%. Meta, down 7.20%. Tesla, again, going to be hit with supply, with parts it needs. Especially, don't forget, it gets parts from Mexico, things like this. It's going to hurt it. And it's been on a real tough journey anyway in 2025, down 5.49%. If we look at the S&P 500, down 3.96%. But look at this drop here. This open with a gap. NASDAQ is the same. Dow Jones, down 1,000 points, over 1,000 points, negative 265. And this is the thing about the pump, the Trump pump. Okay, because let's have a look at this, because this is really, this is really interesting. And we look at it. Let's have a look at it on a monthly, so we can see it a bit better. Okay, so let's start off with the S&P first, right? This is why I've called this one the Trump pump and now the Trump dump. Okay. Now, can we all remember the excitement when he got in, or the market's excitement when he got in? Okay. November is when he won the election. And the market, this is the S&P, skyrocketed. It hit an all-time high. Then, since January, since this tariff talks, we've had the market have a negative correction on the downside. Same with the NASDAQ. There you go, November, Trump pump, all-time high. Come January, or tail end of January, tariff threat, down. I also think the NASDAQ declines also to do with DeepSeek as well, and the tech companies. Let's have a look at Tesla as a prime example. There we go. Trump election wins, Trump pump, goes all the way, all-time high. Then fundamentals set in. Is not just the tariffs for Tesla, but the actual fundamentals, how many cars they're selling. I know I've spoken about this a lot in the show before. And then boom. Boom. So we really are looking at the Trump pump and Trump dump is now happening. Moving on to another story, something else which has happened because of Liberation Day. What happened because of Liberation Day? The US dollar loses its crown slightly. Okay, loses its crown slightly. Because don't forget, again, Trump pump, dollar was strong against the basket of the majors. But since yesterday, actually, it wasn't necessarily yesterday, it was other factors, it started weakening anyway. But yesterday, it's weakened a lot. And at the moment, we're seeing the euro dollar 6-month high, British pound US dollar 6-month high, the loonie dollar CAD 3-month low, the dollar yen 4-month low. So let's have a quick look at these currencies. So you are seeing a weaker dollar across the board. In fact, the euro touched 1.11 today. Let's pull up the charts and have a quick look at the currencies as well. So, well, let me show you. Yeah, I've got the right one. Yeah. Okay. So, like I say, look here again. 6-month high, but let's look at it in a smaller picture. Again, it's trading again at 1.11 again. Like I say, this is often, really down to the fact that they think a lot of people are looking, the US is going to get hurt more than the European markets because they're going to come with alternatives. So it's 111. But don't forget, the euro is also living on a boost of recent announcements and spending of Europe spending more on defense and infrastructure, especially the Germans, etc. British pound, 131 at the moment. 131. Again, this is a 6-month high. And the sterling, in my mind's eye, is going to be really interesting to watch. And again, when this story develops more, because the reason why, unlike EU, okay, UK, and I've said this in yesterday's broadcast as well, UK-US trade deficit is not too out of sync, and the UK is only going to be facing 10%. Okay, we're still hoping to negotiate with the US, so it'd be interesting to see how the sterling performs. But if we go back and let's go down and carry on look at the loonie dollar CAD, like I say, this is at a 3-month low. Currently trading at 140, and the dollar yen 145. Don't forget yesterday we talked about this, that we said that there was fear that depending on these tariffs that the dollar could weaken. Don't forget yesterday, as we were talking, it was trading at 149. The dollar yen. We did say yesterday there was fear of this. We also said there is some analysts out there who think that potentially the dollar yen could fall all the way to 140. So yeah, so that's obviously the impact on that. Now, again, I would love to do a broadcast where we're not talking about tariffs, but it's the one thing which is driving the market at the moment. It's this thing about the markets, it focuses on one story at a time. But we have got something else worth talking about, and that's happening tomorrow. Let's get back to basics. Let's get back to data. And that is, of course, the non-farm payroll due tomorrow. Expectation is for the number to come in slightly lower, 137 versus 151K expected. As well as that, we have US unemployment, which is expected to come in at 4.1% versus the previous number of 4.1%. Now, don't forget, this is going to be quite a key bit of data, because there is general fear, especially with these tariffs, okay, that there is recession fears. And one of the big things, of course, is the job market. Now, obviously, we all know for a fact that tariffs is going to increase prices and it's going to increase inflation. So then the biggest worry then is obviously if the job market starts to slow or starts to drop and inflation starts to rise, you get that dreaded word called stagflation, which they're really worried about. So because of that, this potentially could be a really big market mover. And because of that, of course, I'm going to be doing a watch along of the NFP tomorrow at 12:15 p.m. GMT. I usually go on 15 minutes before the event so we can have a chat about it. We can talk about it. discuss scenarios, share ideas, and things like that. So please come along and join me tomorrow for that at 12:15 p.m. GMT is where I start, and then obviously the events at 12:30. So we'll do a live watch along at that event. And like I say, the thing is with the NFP, I remember back in the day, it used to be a really major market mover, especially when I was in the dealing room. I had to prepare a lot of stuff. Not always as dramatic now as it used to be. However, like I say, with all this thing going on, the market is a little bit still concerned about slowdown in the job market. So this will be a major thing to keep an eye on. Don't forget, this is, of course, a live show. So you can talk to me anytime you wish, ask me questions, or share with me your opinions, because I want to hear what you think. What you're thinking about stuff. I mean, there's one thing in particular, which is interesting, which I haven't mentioned, but I'll quickly show you anyway, because it wouldn't be my show if I didn't bring it up, would it now? And that, of course, is gold. Gold. Which, again, was actually under a fair bit of pressure on during the session before the US Open. And I'll show you this. It actually dropped all the way down to $3,052. But it since has, again, holding way above that potential trend line. And is now back up to $3,123. I'll keep an eye on this because obviously the fundamentals, if this carries on, gold is still going to shine bright. Reserve what do you call it? Central banks, that's it, are buying plenty of reserves. Just keep an eye on bond yields because that could be the thing which could hurt the yellow metal and, of course, about a profit taking. But at the moment, again, it's bounced back up. Like I say, this happened since the opening of the US session. It was under pressure before the US session opened, and now, since then, obviously, there's been again a flight to safety. Like I was saying, don't forget, this is a live show, so you can talk to me anytime you wish, ask me questions, share with me your opinions, especially if you're watching me on YouTube, things of this nature. And yeah, here's the other thing. If you're watching me on YouTube or on Twitter even, and you're not watching me live, because I've noticed a lot of people go back and watch the recordings, which is great. And you're not watching me live, you're watching the recordings, and you have a question or you have an idea, put it in the comments below. I will see them, and I will reply to them next time I go live on air, which is basically every day we go live to have a chat. As well as that, if you're watching me on YouTube and you like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. And if you enjoy this sort of content and you put up with me, give me one of these. It's nice to know that you like what I do. And the same if you're watching me on Twitch and you quite like it, give me a little heart. It's quite nice. Okie dokie. If there is no questions, not a problem. Not a problem. All leaves me to say then, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should I be taking as financial advice. I always suggest you do your own research, do your own due diligence, and of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.